We are nothing sacred. We are nothing sacred. We are nothing sacred.
With Maxwell Silverhammer.
We are nothing sacred. With cruise control. We are nothing sacred.
Oh, yes. Welcome. This is the Nothing Sacred interview with Dawn Fisler. I am Maxwell Silverhammer. Cruise Control had something he had to do tonight, so it's just us. Dawn, welcome to the show.
Very much for having me.
Absolutely. Absolutely. So Dawn sells insurance. Now, I got to say, usually you mention insurance around me, I'm like Charlie Brown, with the teacher, the wah, 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 I go into another universe, like it's just not interesting. But when she came to this meeting and started talking about insurance, it's some of the stuff she was saying was making me think. So first off, Dawn, how did you even get into this kind of business?
That is a very unique story. I was going to college and I had a side gig of house sitting. And one of the people I kept house sitting for was a colonel from the Air Force who worked with the Thunderbirds. And he said when I was getting near, getting out of college, he goes, "I'd like you to meet some people, see if you like it." I'd already graduated from UNLV. I already had a degree in biology, minor in chemistry, and 3 credits short of a minor in psych. And I got introduced, fell in love with it, and that's where I've been for the last umpteen years.
You own your own business, though, don't you?
Yes, I do.
This is your I insure for you, right? That's your business.
Yes,
So
that is correct.
And you guys insure not only Nevada, but Arizona and Utah as well.
Yep, I am licensed in those states, probably Colorado and Montana coming up soon, but not quite yet.
Okay. Well, it's kind of funny. Funny story about insurance. When I graduated college, I also graduated from UNLV because we're both natives. So I don't even know how the hell this happened, but somehow I got this interview for Farmers Insurance. And, this is when you're trying to figure out what you want to be when you grow up kind of deal, right after college. And so I go in and I get to do the interview and everything. So then they said, well, we want you to take this test. And they did have the test for me in Braille. And I remember just reading this thing going, I do not understand. I was just guessing, I didn't know anything. And I completely failed, as you probably figure. And it just wasn't me. It wasn't my. So having said that, I guess the business isn't for everybody, right?
No, in fact, the failure ratio in our industry is extremely high. Extremely high. A lot of it has to do with, just being able to do it right by your clients. And then your name gets out and then people start recommending you and you build your business from that. And that's exactly what I've done.
Is there kind of an art to this, maybe like a talent almost?
Yes. Honestly, this is not for everybody.
Right.
And I know that. But if I wanted an insurance agent with a brain surgeon, I'd ask him for brain surgery only, please. I want somebody that is full time. The problem is our industry can say, oh yeah, I'll come in at a part time, but most of my experience watching new agents come in on a part time basis, they never transition to being full time agents. They just dabble in it.
Interesting. So for you, obviously it's a passion of yours, huh?
Yes.
Wow. Well, let's talk about some different kinds of insurance. One big situation right now was the California wildfires that we had, a month or two ago, a couple months ago. And, a lot of people lost their homes and a lot of people lost their lives. And it was a wild. What can you speak to on that?
people don't look at their policy and they don't understand it because they've called an 800 number, gotten a rate, and it just has accepted it. Okay, I'll take it. That sounds great. They have no idea what they're buying. And the people in California are now finding out what coverage D is, loss of use, in the most unbearable way. They are homeless.
Ugh.
And they're still required by their lender to make that house payment. So that loss of use coverage comes into play for setting you up at another place while your house is being rebuilt. We're 3 months into it. They haven't let them back into the property. And if they had a car that was a lithium battery, it's got to go through hazmat to remove the debris after a fire is just as important as being able to pay for that house payment. You're making it whether you live in it or not, or whether you have a business in that area or not. You are obligated to that mortgage company to make a monthly payment or
So
to your
this,
landlord.
and this is, they don't usually, like you said, people are listening for rates and, oh, that's a cheap rate. That's cool, as opposed to what's actually covered. And some of this is Chinese. Let's go into that a little bit. What did you call it? Coverage D or whatever?
All policies have coverage A, B, C, D, E, and F.
Okay.
Those are just on the deck page. But what I'm trying to explain to you, Max, is that if these people are only looking at the deck page, they're missing the bigger picture. If I said to you, I have 5 wheels, it's red and has an engine, what did I describe?
That's pretty much every car.
What about a fire truck?
True. A fire truck. Okay. Okay.
Okay. See, those pages behind the deck page is everything. Ask an attorney. It's everything to how you're going to get paid. That house burns down. So coverage A is your dwelling. That should at least be the replacement cost, not what you bought it for, not what the value is, but how much are we going to have to replace that house and bring it back up to code. There's some endorsements we'll talk about later, but
Okay.
that's coverage A. Then 10% typically is coverage B. That's other structures. That's casitas. That's your roll-up detached garage. That is your back workshop. That is your woodworking shop. Your pool house, your patio cover, your pergola. Those are other structures not attached to the home.
Okay. Okay.
Coverage C, personal property. Basically take the house, dump it upside down, everything that falls out. And I mean down to the toothpick, the screwdriver, the pen, the old printer, and the iPad. Those are all personal property and they all have limits on them. And is it replacement cost? Your policy won't tell you. Not on the deck page, it won't. Only inside that policy. Coverage D, loss of use. Does it cover you for 12 months, 24 months, 36 months? Do you know? How much are they going to pay you? Do you know? Is it a percentage of the value of the house? Do you know? Most people don't.
Right.
Coverage D, I write with many carriers. I'm not going to put any one of them out there, but to raise the coverage from $30,000 to $300,000 of coverage,
That's a lot better, I would say, right?
it's $23 a year.
Wow.
But
Wow.
you don't know what you don't know because you just don't know what you're looking at.
Mm-hmm.
So that's coverage D, and it could be for 12 months, it could be for 24 months, it could be for actual loss sustained, up to the limit of the policy. It just depends on the verbiage within that and the endorsements. So coverage E is going to be your liability. That means slip, falls, your dog bites somebody, your kid's babysitting, you have a trampoline in the backyard and kids get on it and one of the kids breaks their arm or lands on their head, God forbid, and gets injured. That liability comes from your homeowner's policy. And then medical payments is attached to it too. Limits can be range between $2,000 and $5,000. It's just meant for those little things.
So, and is there an F? I think you would mention an F too.
Yeah, that's medical.
Medical. Okay. Okay. Wow. A lot of moving parts here with this.
Yeah.
So how do you, okay, so your average idiot like myself, I mean, I wouldn't know what I was looking at. and I don't know what's,
Well,
the proper
let's
way.
just take, if you want, let's just take the average person in Vegas. Will that
Mhm.
work for you?
Sure.
Okay, average person in Vegas. Let's pick a zip code, 89141 or 89139, or even out in Henderson, 074 or 052. I know my zip codes. I know my town really well.
Right.
Okay, so let's pick an average home. It's a $450,000 home built in 2011. It's 2,700 square feet. It's a 3-car garage, 3 bedroom, 2.5 or 3 bath. It sits on an average lot in one of the normal developments. So you bought it in 2011 for $323,000. That's what it's insured for the day that you close it, because that was the actual rebuild cost. Fast forward, we're in 2025. 2025, that same home is worth $450,000.
Okay. So it's gone up, obviously.
Okay. But your house insurance has no extended coverage. That's an endorsement that's written into the policy. So you only have that basic $350,000 coverage, and you have a $450,000 home to replace. So what are you doing with that extra 100,000? You got it in the bank?
Right. Right. It's not sitting around. Well, it may be for some people. I don't know.
People don't have it. And if they don't have an extension of 120 or 125% or 150%, that additional cost to rebuild falls on you.
Mm. Wow. Wow. So if something does, so really, I mean, I guess when people come to you, I'm assuming you kind of help them shop, or do you not want to
Now,
sway them? How does that
no,
work?
actually, how this works is somebody will call in and say, "Hey, I need to get a quote on my home." And the first question I ask them is, "How many claims do you have? Are you getting canceled for claims?" Because insurance carriers, especially after the fires in California, have gotten very tight marketed. They don't want to take on multiple claims out of the same household in the last 6 years. So I'll ask them, how many claims do you have? I don't have any. Great. We can move on to step B. Because primary carriers, not the secondary carriers, will give a better rate when there's no claims, period.
Hmm.
Okay. Is it a 2-story, 1-story? What year was it built? Was the roof ever replaced? Was the HVAC done? Is it owned by you, your trust? That titling is really important too.
Right. Right.
Without that titling, you could have some really potential lawsuits that you are not prepared for. So we'll go through that, and I ask them, what's the main reason that they're looking to change? Is it all for price? And if it's all for price, that's fine. I understand that. Well, let's bid it out and see where we go. Well, I can give you the base policy for $1,300,
Hmm.
but for an extra $34, I can add on extended replacement cost. There's building and ordinance law is a rider that goes on policies to bring them up to code. So you bought this house in 2011 under those building codes, but to get to 2025, you need to bring your house up to code, which might require an architect.
Hmm.
It might require to have new wiring done, new schematics done, new power box put in to accommodate those required to get an occupancy permit that allows you to move into the house, as it's a safe house that's not going to burn down when you turn on the power or turn on the gas.
Right.
That is called building and ordinance law, and a lot of carriers don't include that, and
Hmm.
it looks cheaper on paper, but for $12 a year, $18-20 a year, depending on the house that your house was built, $25. You're looking at maybe $10,000 to have your house architecturally have new wiring run in the house, not based off of the old designs.
Wow. So these are things you really have to think about. Well, but let's say, obviously you say the person bought the house in 2011, it's 2025 and something happens. What about in say 2035? I mean, I'm sure codes will change again, correct?
You'll need to keep up with those, and that typically happens when the endorsement will get more expensive as any age of house gets older, is the best way to describe that. So that
Ah,
the more aged your house, the more expensive that rider's on there. But to be honest with you, at this point, you've got there's houses here in Vegas that have hot water heaters in the middle of their hallway. They will never pass code because if that natural gas, it'll kill everybody if the pilot light burns out.
yeah, yeah, yeah. I've seen that. I know what you're talking about. Where it's a little closet right in the hall, you know?
Yes, it is. 1960, 63 to 74 have
Mm,
those in them still.
wow, wow, yeah. Well, mine is a condo conversion. Used to be an apartment. So,
Very familiar with those. So those condos and townhouses, they are two different animals and they are covered completely different.
mhm.
Condos. So let's take the average condo.
You can use mine if you want to. The
Sure. What year was it built?
It was built in 1987, I believe. 86,
Okay, so it's
87.
an older condo.
Uh-huh.
Does it have its own walkway to your front door or is it on a balcony?
No, there is its own walkway to the front door. I'm upstairs, but it's just, you walk up steps and there's my front door. I don't share the balcony with anybody.
So this is a case in point. On condos, your association picks up for the outside maintenance. It depends on the year. Now, the year that you're giving me, those were different back then. Were a totally different animal.
Mhm.
So you have a master plan policy as an association.
Right.
So that master plan policy may pick up for the roof, the walls out type of policy for the master policy, but it may have a $25,000 or $50,000 deductible. I don't know. You'd have to check with your HOA.
Ah,
The second part of that is because of the year that was built, if it is a walls in policy for the master policy and it has a $25,000 deductible, my question is, are you responsible for the drywall or do they pick up the drywall? That is a specific question to ask your HOA every time.
well, I know this when I've had roof leaks, they do repair the ceiling, where the roof had leaked.
So they do. So that means that you may have two walls coverage.
Okay.
Slightly different vernacular, and it does mean something very different. That means they'll pick up, do they paint the ceiling?
Yeah. Well, they put the kills on it, and then I guess they do, they just paint that section.
It's fine. That means that you have probably to the drywall. And then typically most newer condos are you have to pick up for all your cabinetry, your toilets, your showers,
Yeah.
above what it was built with. So let's say it had vinyl plank flooring, it had vinyl flooring on it,
Mhm.
and you've traded it out for travertine, or you've put a marble floor down, or you've put plank flooring in. Any one of those things that needs to be covered under your policy A on a condo coverage
Okay. And that's
because
probably
that's
what I
the
have.
structure side of things.
Right, right. And that's the pretty much the inside of the house. Which that's pretty much what I got, I believe. It's with through Liberty Mutual. So that's
That's how you need to know. You also need to have in any condo situation or in any townhouse situation or any place that you have an HOA. You need
we
to
do.
have loss assessment coverage. It is an endorsement to be added onto a policy. Don't just assume that you have it because you probably don't. If you don't ask for it, you don't get it.
Mm.
Unless you have an agent that's going to say, let me explain what loss assessment does for you.
I don't think I did, to be
There you
honest
go.
with you.
So, Max, you've got 100 units, let's say. Okay,
Yeah.
those are 100 doorways, whether they're a one bedroom,
Mhm.
one bath, two bedroom, two bath, two bedroom, three bedroom, two bath. It doesn't matter, just doorways. You have 100 doors that you're insuring.
uh,
And so all of a sudden there's a problem with the HOA. They got lawsuited. They can't meet the obligation. they can assess upon every door X amount of dollars in the assessment fee per month, per year, per one time to pay the HOA to pay off the debt of the HOA.
That's funny. We're actually dealing with that now. This is our second assessment, as a matter of fact. There was some money that somehow grew legs. I have my suspicions, and I think others do too. But yeah, so to make up for that lost money, we had to pay an assessment last year, and then now we have a second one.
The ombudsman with the state requires them to have enough in reserves to pay that $25,000 or $50,000 of loss for the building.
So if something were to happen, they're required to pay that.
Because that's part of the HOA.
Uh-huh.
So you own 1/100th of my unit, and I own 1/100th of your unit, and I own your neighbor's 1/100th of their unit.
So it's all collective, is what you're saying.
Correct.
Wow. Interesting. Well, I just happen to be on my board too. So I got involved about 2 years ago now. So it's something I probably should have done earlier, but I'm glad I did now. And anyway, what is a bare walls policy? Because I know we had a guy on our board that was big on that. What is that whole thing?
Bare wall policy means typically, and it depends on the year and depends on your insurance carrier for the HOA, but typically that means they pick up to the inside. That drywall is listed, but the hair splitting consequences are, does it include texture or mudding? Yes or no?
Okay.
If it does include texture or mudding, it doesn't pick up paint, cabinetry, sinks, toilets, any of those items, anything that's permanently attached to the walls.
Right. So, okay. I know what you're saying. So things are connected. Your refrigerator, washer and dryer, appliances, stuff like that. Right. Okay. And I guess my biggest fear is always like, say a pipe busts in the wall, because like I said, these places have adjoining walls. And so the plumbing, is sort of connected. I can hear my neighbor when they're taking a shower, kind of thing like that. So if one of those pipes bursts, who's responsible for that?
Depends on how your HOA is written.
So it's your CC&Rs?
Your CC&Rs designates what your responsibility is and what my responsibility is. But we're going to take this a little step further.
Okay.
You said that you live on a landing upstairs, correct?
Uh-huh.
Max? Okay.
Yep, that's right.
So, Maxwell, I'm coming over to visit you. Okay, I'm coming over to visit you directly, not go out to the pool area, not go out to the tennis court, not doing any of that, but I'm coming over to your place. And I start going up the steps. And the step breaks.
Oh.
And I tumble down 6 steps. I fracture a hip and break a cheekbone. Now, I was there specifically to see you.
Yeah.
However, I was using common owned property. Where's the liability sit?
That's a good question. Would that fall on me? I think it would.
Depends.
Because I know with our landings, matter of fact, I had a situation recently on my landing. You know how you go up the steps, there's like 6 or 7 steps, a landing, and then a second group of steps. And that landing was starting to buckle. So I was actually responsible for that repair. That's what I was told.
TC&Rs.
Mm-hmm.
And if I fell down and injured myself on the property, and the stairs are owned by the association, there you go. However, I was going there to see you in a business capacity. My business insurance would pick up for somebody falling in a parking lot over a turnstile. So again, that's splitting hairs, but if I came to purchase something from you, I'm the purchaser, you're the seller, and I'm coming to see you to buy something, That's a business transaction. Hopefully your insurance will cover it if you've got the business rider sitting on it.
Well, what if I'm just some schmo selling something on OfferUp and you come over to pick up, I don't know, a treadmill or a Stairmaster or some thing that I'm selling? Like we're just two people on OfferUp and, you come over to pick it up
You
and you
invited
fall.
me to your premises.
Ah,
You invited me to your premises. Therefore, your liability is going to be subject to how it happened, where it happened, what time it happened, what was the purpose of the trip. There's too many moving parts to say, yes, you're responsible or they're responsible. Or it might be both of you. I don't know.
so it's not cut and dry, is what you're saying.
No. And the same thing with
Wow.
a pipe and a wall. It depends on those CC&Rs, how that base policy for that condo or townhouse or HOA is done.
I'm almost wishing my buddy who was on the board with me, because he's really savvy with this stuff, was on this. I should have asked him if he'd join us. But boy, yeah, because some of this stuff is really, matter of fact, I saw something on your site about sewage, about insurance covering sewage and things like that. What was the deal with that?
2011, $450,000 today value home. From the street to the interior of your house is not a normal covered item. So let's say your sewage line breaks.
Mm-hmm.
Okay. That sewage line breaks. That's going to be covered for service line protection only if you have the endorsement. And this endorsement has only been around for about 5 years. So
Oh,
previously to that, yeah, it doesn't exist, and most carriers did not add it on.
so nobody has this insurance then?
Unless you know what you're asking for. You don't know what you don't know because you just
Uh,
don't know.
I sure don't.
So this is for a breakage of the water line going into the house and the sewer line coming out of a house. Now, condos are different. I own the below line. I own the below level of your unit, and your toilet overflows. Backup
Yeah.
of raw sewage comes into my kitchen, which gives it E. coli, which turns it into a health hazard, which changes everything.
Mm.
And if I don't have the proper coverage, you're going to have, and you don't have the proper coverage, I can sue you because it was your toilet that flooded, or your wash machine vent that got screwed up and it
So,
drowned me out in my unit. Now it's between you and me and not the association.
so now I'm personally responsible if this happens, if I wasn't covered.
Yes.
I had a situation years ago where the ring on the base of my toilet deteriorated,
Yep.
and my toilet was leaking down into the unit below me through the guy's ceiling.
Yep.
And I think they wound up getting mold at one point, and but then they realized where it came from. The owner's not that bright. I'll just throw that out there. He doesn't even live in the state, so he just had a bunch of renters, and for a while the place was vacant. So yeah, the guy had mold. I guess they did a bunch of repairs down there. Well, guess what? My toilet was still leaking. I didn't know anything about this. There was no water on my floor. So it wasn't until the property management company got involved and said, hey, you got a leak coming from your bathroom somewhere. So anyway, I had to fix the guy's ceiling because of that now, his bathroom ceiling where the sheetrock was buckling.
Yep. That is typical.
Yeah. Yeah. So it's interesting. The way some of these, like you said, this collective, insurance, as it were.
Yeah, and it depends. It depends on the year that your place was built. It depends on what policy that the HOA decided to either scrimp on. Oh yeah, they're cheaper. Let's go there. Well,
Right.
you don't know what you don't know because you're not reading all the endorsements.
Yeah. So see, and I know I'm guilty of this. So,
Shop by price. This is the problem with most misunderstood a thing about insurance. People look at a deck page and try to compare apples with guava fruit. They don't even come from, they don't even come from the same continent.
no, no.
Okay. And so you got to understand that you're giving up something Ask, what endorsements don't I have? Do I have replacement cost? Do I have replacement cost on my personal items? Do I have replacement cost on my structure of my home? It's a yes or no answer. Well, this is what you'll hear. I can go ahead and add that. It'll add 20%, but they don't tell the client, well, I also have an option of 50%. And the difference between the 20% and the 50% might be $106 a year in premium, but
Wow.
I'm getting 50% more to rebuild my house for $106. Let's divide that out by 12 months. You're not going to Starbucks once a month, and you've just paid for it.
Mm, wow. Well, I guess the thing is, it's hard to think about the future. We're very stuck in the now, and oh well, that's not happen. That couldn't happen. This couldn't, and we're not thinking what could happen. And it's like I said, I'm very guilty of this. I'm speaking from experience.
Do you think
So,
sorry, didn't mean to interrupt. Do you
okay.
think the people in Palisades, you heard some of these TV stars, that had um, their places burning up. Impending doom, you cannot change your deductible. You cannot change a bit of your coverage. So this is a real case scenario. This actually happened when not Pacific Palisades, the one that just happened, but 3 or 4 years ago. Somebody knocks on your door and says you got 10 minutes to pick up your life and leave. And this is a true scenario that really did happen to people. Hi, there's a fire in the neighborhood. Can I get a $500 deductible? And your insurance agent says, no, we can't touch your policy. Carrier
Right.
will not let you lower your deductible or raise your coverage. That's not the time when the fire's on the top of the hill cresting and you're at the bottom of the next hill and it's coming down the mountain. So what happens is you're in the house, your kid stayed home from school, you got a dog and a cat, and the side-by-side is parked in your toy hauler, and your BMW is in the garage, but the big Suburban is out front that you haul everything with, and it's sitting in the front driveway because it won't fit in your garage. They knock on your door and said, you need to evacuate now. You grab your kid, you grab your dog, you grab their cat, you throw them in the vehicle, you grab a few little items that you can, and they're saying, bust out of here. Everybody's seen the footage. It's on YouTube. And you see vehicles with fire on both sides of the road by the time that they hit the main drag, and they are fleeing for their life.
Wow.
That BMW is now a total loss. The toy hauler with a side-by-side in it that's worth $25,000 is gone. The toy hauler itself is gone at $70,000 because you had a nice one. The BMW is gone with another loss of $45,000. So right there, before we even get to your house, you've got over $110,000 worth of losses, plus then your house.
Jeez. You'll
How
never
many
recoup
deductibles
that.
are you paying? Ever ask yourself that one?
Right. So usually people try, the one. They just go for the one. And when they say deductible, what is that?
Well, is the portion that you pay out of pocket first. Case in point, you have a car accident. Most people that are driving cars and they have a loan on their car are required to have comprehensive and collision on it. Comprehensive is fire, theft, flood, vandalism, hail damage. That is a comprehensive claim. Or in special cases, a wild animal running out in front of you and hitting the front end of your car like a deer.
Okay.
Okay. Collision means you swerved to miss the dog and hit the tree. That is a collision claim subject to a different deductible and different payouts. So the car is now totaled due to a fire. So that will come under your comprehensive deductible. Your collision deductible is when you hit something. That's what you pay out. So you go down, bring your vehicle in. You had front end damage done to the front quarter panel and the front grille, for example. Those damages done, you have $1,000 deductible. How much is going to get my BMW back on the road? It's going to cost me $9,852 plus rental car. So the insurance company cuts a check minus that $1,000 that you have to pay out of your pocket.
Right. You're responsible for that. Okay.
Exactly. That's how a deductible works. Same thing goes with a house. Somebody breaks in and vandalizes or steals all your jewelry or guns or, something to that effect. You're
Yeah.
paying that first $1,000 or $2,500, depending on what the deductible looks like. That's your responsibility. And a lot of times I have my clients, don't call in the claim. You call me first. Let us call in the claim. Tell me what was taken. Well, about $550 worth of stuff. Well, you have a $1,000 deductible. We can file the claim for you, but it will show as a claim, zero pay. This is not in your best interest. Do you want me to proceed?
And usually they'll say yes, huh?
I have had somebody file a claim, truth, for $23.
What? For $23?
Yes. The actual cost of their loss was $523. They said, well, that's why I have insurance. You file that claim. Okay. We did. Claim is now number one for $23 paid out.
Because they were responsible for 500 of that, correct?
Well, I'm entitled to my $23 and that's what I want. Oh,
Wow. All righty then. Never mind, you just paid 500, right?
exactly. But sometimes penny wise, dollar foolish. Now, somebody calls me up and says it's $655. How's it going to impact me? And then we go through their options.
Hmm.
Because
Okay.
that's the difference between having an agent that works for you and having an 800 number. I've had people call in an inquiry, and in fact, I'm dealing with that right now. They inquired, hey, my HVAC man found a crack in my joisting in my roof. Is that going to be covered? And they made the phone call. Yes, it is. Would you like us to send out an adjuster? Well, I guess. I'm sorry, that's below $1,000, but it is a non-paid claim, but it still counts against them.
Hmm. So it comes back on them later, is what you're saying. Like,
And they could lose a discount for if they had 10% claims free discount, they could lose that. Or some companies even have like 20% discount for no claims.
wow. So I guess the moral of the story is keep your shit in working order. you know?
He said you didn't know that you had a problem with the toilet. The wax ring, that's probably what you're describing,
That's
had
exactly what it was.
diminished over time, and
Yep.
that wax ring allowed moisture, even if it was just clear water, but it allowed the moisture to seep between the two layers.
Oh, totally. Oh, yeah. No, it damaged his ceiling in the bathroom for sure. But what was funny is he did all this work to repair, for mold or whatever. And then obviously the leak was still occurring because I didn't know anything about it until somebody brought it to my attention. So, yeah.
That is very common.
Yeah. Oh, yeah. Yeah. It's just part of how things are. It's you can't really, not really much you can do in those cases. I got another scenario for you. You're going to love this one. So I got a friend who does the kind of like the van life type thing. And now she lives in an RV and she's a smoker. So what kind of scenarios do you see going on with that?
She needs to have an RV policy with a rider for her personal possessions, the liability for if she's got a dog or a cat,
She
and she
does.
needs to have it as a full timer.
Mm,
FULL timer, full timer rider, and the full timer rider makes the RV a full time residency. So the liability would cover her both if I came over to her place and her dog bit me in the face.
uh,
I'd have coverage there. And then the second half of that is I break into her place and steal the laptop and something else. She's going to have adequate coverage for not only the liability, but the personal possessions associated with such.
okay. Okay. So that sounds a little more cut and dry than having a condo, I would guessing.
Your adjuster has everything to do, Max, with this. They obtain your policy. They
Hmm.
obtain the master policy. They make a decision between the two of them who's responsible for what.
Right. Right. Okay. So they haggle over it, basically.
What the adjuster does. This is how much we feel it's going to cost to put it back to where it was. This is your portion. This is their portion. There you go.
Wow. Wow. That's definitely, when I'm finished with most interviews, I'm like, oh man, that's great. I'm really up now. I'm almost kind of depressed. I'm like, oh God, because now
You
I got
don't
to
know
look.
what you don't know.
Yeah, yeah, yeah. But again, I'm one of those people that goes, I shop by the price and, oh, that's cheap. That sounds good. I believe I think it's like $30 a month for my policy. So I might have to have you look at it at some point.
We look at it for you. That's no problem.
Sounds good. So is there anything else you want to mention? Any other things that people should look out for or be aware of if, when purchasing insurance or making a claim?
When purchasing insurance, I get this a lot from people. Well, the Palisades, isn't going to affect us because we don't live there. We don't have that fire damage. I hear this all the time from people I chat with, and I'm like, yeah, you're grossly uneducated on this matter. So how is Palisades going to affect us here in Nevada? Big time, because every carrier has a deductible with their reinsurance company. So I'll take on the first 300,000 or 500,000 or 750,000 of the house, me as a TV ad insurance company,
Mm-hmm.
and then my reinsurance jumps in and pays for the resulting remainder on that house. So we're going to take a Palisades house. We're going to take, better yet, a house here in Vegas I just covered, $1.32 million house.
Okay.
Okay. And the first X amount of dollars, and it's a contract between the insurance carrier and the reinsurance company and their AM Best rating as to what they pay for premiums to the reinsurance company. Does that
I
sound convoluted?
You kind of lost me a little bit. I'm going to be
Okay,
honest with you.
that's okay. So this house of a $1.3 million home has the first 750,000, for example, please don't hold me to this, but for
Okay.
example, the first $750,000 is carried by the carrier. So
Mm,
that's your person that you see on TV, or there's another 3,000 carriers you don't know about that are just as good. As long as they're A rated or better, they're just as good.
okay.
That's
Okay.
that's with a rating service called AM Best, and they rate every carrier with a letter grade. So it could
S-
be A plus, A minus, B plus, B minus, and a
s-
C plus company.
So be looking at those things when shopping for insurance. Is that what you're trying to say?
Yes. The second half of that is the reinsurance company, based off of those ratings that that primary company has, charges them a rate for every $100,000 or $1 million over that. So if reinsurance companies are on the hook and pay out $55 billion, how do you think they're going to spread that risk throughout the rest of the U.S.?
Oh, I see. So this area that they're covering is now going to make other regions start to suffer a little bit because they can't, insure.
That's correct, because they're not a philanthropic. They need to make a profit just like any other business, because
Right.
that adjuster doesn't come out for free. The gal on the phone taking that claim doesn't work for free. She wants to make sure that she can pay her house payment and make sure there's food on the table for her little kidlets.
So let's say Liberty Bibbity, who I'm insured with, um, they're probably insuring some of the people in the Palisades right now.
Yeah, well, that's that, yeah, maybe and maybe not. it depends. That happened to be a carrier that started moving away from California 3 years ago.
Oh, really?
Yes, but what carriers did in California was saying, no, we're not withdrawing. No, we're not withdrawing. We'll just allow the agents to write one policy per month.
Oh, okay. So who decides who gets that one policy?
Agent
Uh,
underwriting.
oh,
And
okay.
underwriting can come back and say, I don't like that house. Go find another. I don't like that house. Go find another. I don't
So
like that house. Go find another.
just random picking, huh?
No, it's based off of criteria. They have to
Gotcha.
by law. Yeah, it's
Okay.
insurance law. They have to have a set guidelines as to risk. So a fire hazard risk 10 is non-eligible. That means you can't get coverage. Fire risk 8 means that the fire hydrant or fire station is too far away, or it has a bad OSI rating for that community.
What's a OSI rating?
Don't know what the initials mean, can't remember, learned it a long time ago. But what it means is, how long does it take for a fire unit to go from your doorstep to their firehouse?
Hmm.
And how many feet they have to run the hose from the nearest fire hydrant to put out the fire at your place. You can talk
Wow.
to a fire expert, and this goes with the firemen understand what I'm talking about. How long it takes. The longer the time, the worse the damage. If I
Yeah.
only got one way in and one way out, if it's packed, how can I get a fire truck to put out your fire at your home you need services right now?
Mm-hmm.
Because once it hits the attic, the house is pretty well totaled.
Yeah, I would assume so. Because at that point, it's all down,
This
it's
is
on
what I'm
top of the
getting at.
house.
That's an OSI rating for each community.
Do you I'm sure you know a lot of firefighters. It would be interesting to get one on the show, maybe, to talk about this kind of thing.
Everything from crazy. I've had cars go through houses. Both fires that I had with clients started with a hot water heater. One was gas, one was electric.
And
I
this was
had a cherry bomb, a bottle rocket land on someone's roof to cause them to lose the half backside of their house.
I've heard of that happening, especially
Yep.
during 4th of July, of course.
I had a fan in a garage by their washer and dryer. The motor seized, arced, and because of the amount of lint that was in the garage, took out the
Oh,
entire garage, along with her husband was a painter. He had like 90,000 gallons of half-used paint.
oh Jesus.
And paint is an accelerant that extenuated the circumstances. Those are the 4 house fires I've had as an agent.
Wow. That's scary stuff.
And you don't know what your neighbor's doing in their place.
No, absolutely not. Well, geez, and you hear stories about these meth labs, like if your neighbor's got a meth lab or something and and it blows up.
If you are committing a felony, coverage, my guess is, don't hold me to it, but I feel that if it was a felonious act being done, I'm being careful here, then your coverage would be negated because of the felony that was being committed at the time that the fire happened.
Oh, I'm thinking about if I had a neighbor that was committing that felony, you're not going to see me doing anything like that. But I'm just thinking, hey,
that would be an adjuster question, and that is out of my scope. Do I understand it? Yes. Who it lies on and how they pay out? Yeah, that depends on the policy.
right.
That's those other 100 pages behind the deck page.
Wow. So you really got to read this stuff deep and understand what you're doing. I probably would even say hire someone, huh? Like yourself?
Yeah, paid by commission. So, I'm just always upfront with that. I can't work for free. You can't work for free. I've got a car payment and a house payment like everybody else. So
Right,
yeah.
right.
So what we do is when we run it and it looks good, we give our clients the options. Generally, here's five of the best options we have.
Okay.
You may want to think about this for an extra X amount of dollars. This is what you're gaining. And sometimes it's as little as $25. What is $25 in the course of your world really going to mean in a year?
Right, right.
$2 a month? You can't even buy a McDonald's coffee with that.
Not anymore. You can't. No.
No. So let me increase the coverage for $25. And I just recently had some attorneys. Well, this is the best I could find. Well, what they're suggesting is just not put it this way, there'd be questionable availability of coverage if they decided to do it their way versus the right way. But they
Ah.
are saving $450.
Now, are you telling me that somebody would hire an attorney when they're shopping for insurance?
No, I've been approached by attorneys that have tried to do something. Can I do this?
Oh.
No, because that's not their forte. You have 50 different kinds of attorneys. You've
Yeah.
got a business contract attorney. You have obviously the personal injury, which litter the landmarks throughout Vegas.
Oh, yeah,
You
God.
have okay. You've got corporate attorneys. You've got family and trust attorneys. You've got all of that. My big thing for the viewers are: if you've got a trust, make darn certain you have that listed on as additionally insured on any policy. Period. Renters, condo,
Yeah.
townhouse, home.
Well, and we have in this complex, most of us that live on property, I'm an owner and there's a few other owners that live on the property, but most of the time it's renters that are living there. And from what I've heard, they're actually telling renters that they need renters insurance now. Is that a mandatory thing?
Yes, it is because the landlord does not want to be saddled with any of their damages. And the second thing is, I don't want their liability.
Mm.
So
Wow.
you as a board member may want to bring up that you need to be listed on, i.e. the name of the association. Don't put it out there. Don't say it.
Right, right.
So XYZ Association, its officers, its directors, and its board members as being additionally insured on their policy. Period.
Hmm.
That would protect your HOA. Don't say who it is. Please don't.
No, 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 no. But I'm just letting you know, I do own my unit. I'm not a renter. I was at one time. I lived here when they were apartments. Um, that's a whole nother story. But back then we didn't need homeowners. This is, in the late 90s, early 2000s. So things have changed quite a bit since I used to rent, apparently. It's a interesting thing. Well, you still there?
am.
Okay, sorry, you were cutting out just for a second. Well, why don't you go ahead and give your contact info or whatever you want people to know, and that way, if they do want to reach out to you again, guys, it's Nevada, Arizona, and Utah that they insure, that they have agents in. So anyone in those, and you said Montana and Colorado are also going to be jumping on board soon.
They're coming on board. Yeah.
Okay. Okay. So anybody from those regions, if you're listening, you may want to reach out to Dawn and see what she can do for you. You want to, whatever you want to give right now. This is your time to go ahead and spit all that out.
Fisler. I'm the only Dawn Fisler in the whole U.S., so you can pretty much find me. If you put Dawn Fisler, Fisler, insurance, you'll find my webpage, IinsureForYou.com. I've been an agent for a long time, and I actually read the policies. So 702-798-0888. If you just want to talk to somebody, hit option 2. We had too many robocallers calling in and hanging up. So you do need to hit option 2 to get my office. And tell me what your problem is. And Dawn at I Insure for You is my email address. So if you've got a question, always put question and make sure that you reference back to Max so I know where the question came from.
Right.
And
that's the
we
number
can
4
start
too.
a discussion.
That's the number. And I want to just say too, it's I Insure the number 4 and the letter U. So those aren't spelled out, just so you guys know. So it's I Insure number 4, the letter U.com is how you can get to our website. You got all the pertinent info up there. Dawn, this has been great. Very educational, somewhat depressing, I will tell you. Because now I feel like, geez, maybe I'm an idiot. And like you said, you don't know what you don't know. But, it definitely lets me know, man, I probably should have been a little more diligent, at one time. So anyway, yeah, that's it. Any last words?
I appreciate you putting it out and asking the questions that I get asked the most, and, understanding what you're trying to compare is apples to guava. They don't even come from, they can be totally different, but yet look the same. You don't know.
One comes from Washington, one comes from Hawaii, right?
Yep. They're both US, they're both US states.
Yeah, but not very close.
No. And that's how far your policies can be, even within a carrier themselves. That's why those endorsements are critical to understand and look at.
Yeah. Gotta check those things out. And I'm preaching to preaching to the choir here. I'm one of those people. So anyway, well, Dawn, thank you again. Hold on with us till we end here, obviously. And the rest of you, I am Maxwell Silverhammer. This has been the Nothing Sacred interview with Dawn Fisler. And that's the story there. Just see ya.
We are nothing sacred. We are nothing sacred. We are nothing sacred.
With Maxwell Silverhammer.
We are nothing sacred. With cruise control. We are nothing sacred.